In today's video, I'm going to take a look at some long-term cycles and maybe make a few guesses as to where I think we might be headed. So the first question is to try and determine whether or not I think the 3-year cycle in this CRB has topped. So a couple of considerations. This 3-year cycle from mid-2012 to 2015 ran about a normal length. They tend to go from 3 to about 3.5 years. This was about 3.5 years. But then we got a long cycle. This cycle here ran just a little over 4 years actually. And sometimes, as I've noted, a long cycle will be followed by a short cycle, or a short cycle will be followed by a long cycle. So considering that this was about a year longer than normal, or at least 6, 7, 8 months longer than normal, maybe this cycle that's in progress right now might run a little short. So we would, if it was to run normal, we would expect a bottom in spring of 2023 to summer of 2023. And I'm kind of thinking that is what is going to play out, and it's somewhat based on the where the stock market is headed, where I think it's headed, and the longer term 4-year cycle in stocks as well. I kind of think they're going to all bottom together in a semi-deflationary collapse. But that's another story. The question right now is how do we want to invest for the rest of the year? So my thinking is that this probably, I'm going to say, I don't think it has topped just yet. I think this is a really vicious pullback, but I think we may have one more leg up in the CRB before the 3-year cycle tops. We've kind of broken through this resistance here and this resistance here, and the only resistance really left is this one here in 2011. So I'm going to say there's potential maybe to come off of this intermediate cycle low that either has or should form here pretty soon, and maybe make one more run and test this next resistance zone here. I don't think we're going to get to here. I'm pretty sure we will get to this and surpass it during this secular bull market in commodities, but we're going to have to get past the first 3-year cycle low before we have a chance to come test this level. So right now I'm just trying to determine whether or not I think this 3-year cycle has topped, and I'm going to say I don't think it has. Now let me move on to oil, and this is one of the reasons I don't think it has. It's not quite as easy to see on the chart here, but this was an intermediate top, and then oil has been going sideways for several months here, and I think that is the factor that has me thinking that we haven't topped yet. Instead of just a huge gigantic crash off of what would be maybe a kind of a semi-parabolic run, oil hasn't really done that. It's kind of just gone sideways here and finally come down to test this 200-day moving average. So it's more or less, it has gone sideways and allowed the 200-day moving average to catch up to price. And that often is a consolidation in an ongoing trend. So I think once the bottom is in here in oil, that we could get one more leg up. Maybe we get an escalation of the war in Europe soon, and we could come up and test these all-time highs before that 3-year cycle in the CRB is tops, and then we start moving down. We start into the declining phase of the 3-year cycle. Let me shorten this chart just a bit so you can see what I'm talking about here. So here's what I'm talking about. This was I think an intermediate top, but instead of just a huge crash that maybe takes price considerably below this 200-day moving average, and we kind of get a pendulum back and forth, and then we start up again. Instead of that, we've got this sideways churn, and that tends to make me think that this is a continuation pattern, and we're going to have another move higher. And I mentioned in some of my previous videos we really needed to move below this pivot here and get a failed daily cycle before I was going to be ready to try and call a bottom. And we did that this past week. Oil did drop back below this pivot, so we've got a failed daily cycle, so we've met that requirement. We're going to need to break, this is a daily cycle trend line, would be this move off of this peak and through this pivot here. The intermediate downtrend line would be from this pivot to this pivot. So you know, an intermediate rally, the rules say that it should break the intermediate trend line, downtrend line, and that trend line is way up here. So that makes me think that you know, once we get this bottom, maybe we got it this week, but once we get this bottom, we're going to rally enough to break this trend line. And if we do that, especially if we do it kind of early in the daily cycle or intermediate cycle, then we would have the potential to break through this and test those all-time highs at about $147, $150. So that's kind of what makes me think that we may not be quite done with the rally in this 3-year cycle in commodities. And then also I want to look at gold, and again, this is where I think the most potential is going to be at, because we've built just an incredible amount of fuel. I'm seeing most gold bugs have become completely discouraged, despondent, and they are going to sit on the sidelines for a long time after this intermediate cycle starts to rally. They won't believe in the rally, and that'll be a lot of fuel for the move higher. Let me widen this chart just a bit as well. So I don't think it's unreasonable at all to expect or for gold to test this resistance again. I don't know that it's going to. I would say the odds are probably not great that it's going to get through it and get a sustained move, but I think the odds are pretty good that we are going to test this a third time. And then I think we're probably going to have to move down. Gold will move down along with the commodity complex and probably stocks into that multi-year cycle low. So that would be the 8-year cycle for gold, but I think it's going to shorten a little bit this time. I don't think it's going to run the full 8 years. I think it might be more like 7 years and bottom in the spring or summer of 23 instead of 24, where it would normally be due. But I do think we've got the potential to retest these highs here during this upcoming intermediate advance. And then here's the driver, I think, of what is going to kind of pull everything down into their multi-year cycle lows. So for the CRB, it would be the 3-year cycle low. For gold, it would be an 8-year cycle low, although, like I said, I think this one may bottom in 7 years. But I think, well, I'm pretty sure that the stock market is in a bear market, at least a cyclical bear market. And here's part of the problem. The multi-year cycle in stocks is a 4-year cycle, and this cycle has topped in less than 2 years. So that suggests to me that it's trying to left translate. Most left translated cycles will drop below the previous cycle low of the same degree, and that would be the March low. So this cycle that is trying to left translate would presumably come down and drop below this March 2020 low before it bottoms. We are due for a move up. We need to shrink some of this gap here between price and the 200-day moving average, and I warned my subs a couple of weeks ago that this was the potential that could happen, is that we just get this very choppy whipsawy move that's moving higher, but it just has no momentum behind it and no trend at all, and it's just damn near impossible to trade. And that looks like what is happening here. Now, I will say this. Let me finish this one thought. So anyway, I think we're going to get a bottom out here in spring or summer of 2023. I suspect we're setting up for some kind of a crash event this fall, and then maybe a retest and marginal undercut of that in 2023. So I think when that happens, it's going to infect everything. The selling pressure, the margin calls are going to infect everything, and it's going to pull, when the stock market crashes into its 4-year cycle low, I think it's going to pull the CRB down into its 3-year cycle low, and I think gold is going to follow that down, maybe bottom a little earlier than everything else. It does tend to do that, and pull gold down into that, what I think is going to be a 7-year cycle low in the spring or summer of next year. So that's kind of what I'm looking at. I think the stock market is setting up to infect everything with selling pressure later this fall and into the spring or summer of next year. So now let me just go over one caveat here. So this is a little bit shorter time frame. You can see how we're coming out of this cycle low. This was a really short daily cycle, and if this is an intermediate cycle low, it would have been on week 16. Here was the last intermediate cycle low. So this is kind of a short intermediate cycle low. Most of them run 20 to 25 weeks. So there is the possibility that this daily cycle could fail to make a higher high than this, kind of churn around a little bit, and then fall down maybe into that FOMC meeting at the end of the month, undercut this low, and then give us an intermediate cycle low that's in a more normal timing band than this 16 weeks here. So that's something I'm watching here, and we've just kind of quit playing the stock market at the moment. We made one attempt to catch the expected rally back up towards this 200-day moving average here. That one didn't work out. We tried again on a second attempt here, got out at break even, and now we're just kind of running out of time on this daily cycle. So at this point, I'm just going to kind of ignore any of these rally attempts because I don't think they're going to get a whole lot of traction, and we appear to be kind of stuck going sideways as we head into that FOMC meeting. So probably just too much indecision going into the FOMC meeting to get any kind of a trending move. And without a trending move, it's really difficult to make money. So we're going to sit on the sidelines for now and see how this progresses, and just be and we're just aware that there is the potential here that if we don't come up and make a higher high here pretty quickly, that once the pull of the daily cycle low starts to draw stocks down, that we could come down and break this low here. And then at that point, that's where you want to really take a big position long in anticipation of of a good strong move back up towards the 200-day moving average. But right now, I think just too much churn, too much indecision ahead of the FOMC meeting, and I don't think we're likely to get any kind of a trending move here. And this whipsawing kind of market is going to be darn near impossible to make money in. So that's what I kind of think is happening. I think we're going to have some kind of a crash event in the fall, later in the fall, maybe near or after the elections, and then I think we get a final low for everything probably in the spring or summer of next year.